Good morning, folks. My name is Drew Rathgeber. I am the president and owner of ProGoldTrader.com and ProFuturesTrader.com. A little bit about me. Well, I got my start at one of the nation's largest spot bullion dealers in Newport Beach, California, over 20 years ago. So I have a little bit different perspective on trading precious metals because I've been working on the inside, okay? And in saying that, I see a lot, I'm able to analyze the psychology of the markets. I take the orders. I see all the, what the internet has done to the mindset of the gold trader and so forth. So I have a little bit different perspective of how a more realistic approach to trading these markets. But real quick, because we are licensed with the CFTC, and this is another tidbit of information, but because of our license status and our professional status with the CFTC NFA, we always have to have our risk disclaimers. And this is kind of a thing that how you can tell the difference between the good guys and the bad guys. The good guys will have the proper risk disclaimers because when the NFA does come in and do an audit, they will look at this video and make sure I have all my proper risk disclaimers. But effectively just letting you know there is substantial risk of loss, and trading futures is not necessarily suitable for all investors. All right, so let's go and take a look back on gold. This is the continuous GGC product. We opened up at the beginning of the year with a low of 1831.3. We traded well over the 2100 mark a couple Sundays ago when we had the Iran Red Sea issue. Couple drone and missiles were launched at some of our ships. Gold spiked that Sunday night. Now, in saying that, if you were in one of those ETF accounts or those spot trading accounts, you couldn't even trade that Sunday night. That's why I started ProGoldTrader, to educate people more on the professional side of how we trade these markets. You could have traded that night with ProGoldTrader because we have an almost 24-hour trading market. But in saying that, right now, I believe we're about the 2080 level. We are bouncing around looking for those stops overhead for those short stops. Now, in saying that, we probably could spike to 2100, 2150. But in saying that, we'll get to that more towards the end. I have an analysis slide basically on my projections on what's going to happen. So let's go and jump into silver real quick. A look back on silver, you can see this has been an interesting one. This one I feel has been undervalued. It's more largely used for industrial use. You can see, we traded at the 1750-ish, 1730 area. We've got higher lows, and you can see that 2434 when this slide was taken. A lot of overhead resistance at probably about that 25, 26 area. But I do see a lot of potential for silver, just because it realistically should be trading over $50 per troy ounce if you put it in relation to gold and its recent record highs. All right, so I went ahead and created an extra slide for silver because I think there's a lot of opportunity in silver. But the silver to gold ratio is 85-1. It's at a historically very high ratio. And this is an interesting one. I've got another slide, or the next slide I'm going to talk about this. There's rumors starting about a new USA Treasury dollar that's backed by possibly silver and gold. So next slide I'm going to talk a little bit more about that. So that's another reason why silver. Green technology, solar, electric vehicles, electronics. Again, that industrial demand. Gold quite doesn't have that industrial demand. And with silver at these lower prices, that industrial demand can increase. Supply constraints. Mexico is on the decline in terms of mining silver, okay, and they're a large producer of silver. Another reason why silver, the investment demand could significantly increase, and also it's a possible, inflation hedge. But let's get into this USA Treasury dollar, and I want you guys to, you heard it here probably for the first time. I just came across this in the last week. Lots of sirens and bells and whistles went off, but effectively you've got the M2 money supply decreasing, and this new USA Treasury dollars, it's like a new currency, and there's rumors that it's being backed by gold and silver. Cannot confirm that, But in saying that, you say buy the rumor, sell the news, right? So that rumor is just now developing about this new USA Treasury dollar. And are we going to get rid of the fiat US federal dollar and start this USA Treasury dollar in 2025? Don't know. I'm still researching this. So if you want, go out there and do your own due diligence and try to figure out what this USA Treasury dollar and what they're up to, okay? But it is something that's newly listed on the usdebtclock.org website. All right, let's talk about the national debt, $34 trillion. And then also I put in there all the different recessions we've had. You can see the COVID recession, very small recession, but really we haven't had a big recession since the 08, 09. Like I said, we had a small one in COVID that lasted about a year. But you can see all the different recessions that we've had going back in time over the last century or so. And I think we're overdue. All right, so the U.S. national debt is really, one of the drivers, or can be one of the drivers for precious metals, and the interest on the debt. This is interesting. This year, the interest on the debt is expected to be higher than the defense spending. So think about that, folks. Just the interest on our U.S. debt is going to be higher than our defense spending in about a year. It's not sustainable. That's the point I'm trying to say. The U.S. federal debt to GDP ratio, 135.45%. I mean, are you kidding me? I mean, wow. So that is really uncharted territory, folks. And then the debt per taxpayer right now, per taxpayer, the debt is $259,949 for each taxpayer. Folks, this is getting literally out of hand. And one of the things that's saving us is we're still the petrodollar, but we'll talk about that here in a second. So let's talk about the previous recessions. You can see here, COVID-19, February 2020 to April 2020. It was a very brief downturn, but they basically printed our way out of it. And that's how we got the inflation. So it's a bit of a double-edged sword. But really, the Great Recession is really the last big recession we've had, okay? It's been a long time. We're talking over 13, 14 years. And I'll never forget 08 when that happened. I'll never forget it for the life of me, that day when the banks failed and then the government bailed them out. That's when I knew, and I'll never forget, I'm not going to say relatively new. I mean, been in the business for a long time, but I'll never forget that how un-American that was. That, America's always been based off winners and losers, right? And that's how you create things. Now the government chooses the winners. And to me, that was just astonishing. Now, I know they did it for the overall good of the citizens and bank deposits, but in saying that, that's when I knew fundamentally America had changed, was back in 2007, 2008, when effectively the subprime mortgage issue failed. But in saying that, it was the bank's fault. Go see the movie The Big Short. There were people that saw that coming, and effectively they were just giving loans out to people that should never had loans to begin with. So really it was policies that created that by Congress, and we can get into that, but not going to right now. Then we've got the dot-com bubble recession. And then here's what I want to talk about here, number 4, 5, 7, and 8. I'm going to kind of bulk these together. But all those recessions, you can see a key word: tighter monetary policy and then oil price shocks. But really the words are tighter monetary policy. And we are in that environment right now. That's why I highlighted those in red. We are in a tighter monetary policy with rising interest rates. Now, in saying that, the government just came out and said they're expecting to reduce interest rates, and that is the narrative for right now, okay? But let's say 2 months from now, 3 months from now, that narrative changes, and it does, okay? And we basically trade off of the rumors of what we think it's going to be, right? We don't trade off the actual news. So in saying that, if they come back in 3 months because inflation does spark back up, housing prices skyrocket, so forth, they will raise interest rates again. So recessions quite often are caused by tighter monetary policies, and we've been in that environment for the last year or two. So just something to think about. I do think we do have a recession possibly coming, but just depends on what the Feds do. All right, the bulls. Really, when it comes to precious metals, excuse me, my coffee. But right now, when it comes to precious, uncertain times, boy, do you guys feel it like I do on inside your gut? Like there's something seriously wrong right now between, what's right and what's wrong, and really how we're being represented in Congress. I mean, so the uncertain times, that's a very bullish factor for precious metals. So I know you probably, all of you feel in your deepest of deep core gut, your intuition, something just seems really amiss right now. The bulls, as far as hedge against inflation, portfolio diversification, rising demand, central banks are buying. I know they pulled back a little bit this year, but in saying that, they're still buying a lot of gold. Limited supply, technological advancements, big one, election year. How is this going to go down this year with the election year, with all this chaos kind of going on with these wars and deficits? And in the last one, psychological and culture. We are in unprecedented times with this immigration issue, creating a lot of instability. So what's really going to take place this year for 2024 with all of these uncertainties that are being thrown at us? And I think, gold will continue its march higher. So we'll go ahead and take a look at the bearish factors. Rising interest rates. What's interesting is, interest rates have gone up significantly, but gold has actually held. So just, I know it went up and down, in a consolidation pattern, but overall it held pretty good considering interest rates went up as quickly as they did. If we have an economic recovery, that could actually lessen the demand. Market psychology, storage and security costs, cryptocurrency competition, that's a big one. That basically gold is competing now with a lot of these cryptos, which we offer, the Bitcoin and Ethereum. And then geopolitical events, if we start having peace and harmony, and say, for instance, the Ukraine and Russia war ends, there could be a little bit of a premium, even though I don't think there's much of a premium, but a little bit of a premium in gold would be taken out. So we'd have to just stay tuned. All right, so here's just some analysis, some of the biggest and up months and the biggest down months. The goal of this slide is just to show you guys that gold really doesn't move as much and as quickly as a lot of you think. I know on YouTube right now, and whenever I see any of these guru guys, Kiyosaki and Sinclair and all these different guys on YouTube with these outlandish, predictions, it's becoming very toxic in the gold trading community, all these clickbait websites. And I'm kind of at war with these guys because a lot of things that they say, we just cannot say. Regulators won't allow us to use extreme fear mechanisms. So really my analysis, I'm just showing this to you guys that, 17.7 was the biggest initial surge in March 2020, but you can see 7.2, 5.9, 5.8, 7.3, negative 5.2. Another note too is, 6%, 7% moves. That is basically the margin requirements for gold within ProGoldTrader.com. So we'll talk about that here in a little bit. All right, so what I was just talking about, the margins. Current margins as of a couple of days ago is 91.40. What do I see happening? Maybe a 3 to 5% decline. I know we're making new highs right now, but this is in Q1. Kind of flush out those weak hands. So I wouldn't be surprised if we go up and then we kind of see a quick 5%, maybe 6% pullback and more consolidation, hit the reboot button, and then off to new highs. You guys have to realize that, gold does move, but a lot of time it really doesn't move as much as one would think. So you got to kind of be preemptively in the market and realize that, based on the margin requirements of just shy of 5%, really the market's moving up and down those 5-7% moves up or down, trying to push everybody out of the markets, okay, and take those stops out. That's really what the driving factor of when you're looking at a chart and the market movement. My best guess here we go. So my best guess for 2024 is to see, 2400, I think is more of a realistic approach. So again, on average, the 50-year average for gold is a 9% move. On a big year, we might have 22, 23, 24, 25% move. But in saying that, for this year, and then, we could see, depending on what happens from a geopolitical perspective, I'm talking bombs, I'm talking war, I'm talking instability, you could see a spike to 2,600 or higher from that. Outlier factors where, the Feds can step in and crush gold, effectively the geopolitical situation, inflation, the Fed's response, how they kind of handle things from here on out. If you see, for instance, in 3 months, they're going to jack up interest rates, say 1 or 2%, that could have a really adverse effect on gold. But overall, based on the trajectory and what I'm looking at right now, I think a realistic approach would be to see 2,400, possibly 2,600. So that is the, I guess the money slide, as they call it. That is kind of what I'm predicting right now based on the trajectory. And it's going to be very volatile this year, folks. So buckle up, watch your leverage ratios, trade in a responsible way, talk to someone like me, and I would tell you how to structure it. Leave some gunpowder in your hip. So just for the what if situation. So that wraps it up. That is, here's my ending risk disclaimer. Again, have to provide this and put this up per NFA CFTC regulations. And my last slide here, if you need to reach out to me, you can reach out to me at 1-888-776-GOLD or drathgeber at ProGoldTrader.com. Other than that, I hope you guys have a fabulous 2024. It is going to be an exciting 2024, especially in the precious metals community. I'm excited. Hope you're excited. And again, have any questions, reach out to me. Take care. Bye.